Hey, what's up, my friend? So, welcome back to the monthly market analysis for the month of August. So, for those of you who are new to this type of videos, right, what I do each month is I publish a video like this. I share with you the best trading opportunities that I'm looking at for this month and how I'm looking to trade it. And also along the way, I share with you the trades that I took, right, the winners and the losers, right, and my thought process behind it. So this way you kind of have an understanding, right, to how I trade the markets, right, based on the price action on the charts. Okay, so without further ado, let's get started. The first thing that I want to kick off, right, is to share with you a few winners and losers that I had recently. So this is the chart of Aussie yen. You can see that this market was actually discussed in previous month market analysis, and I was actually short. So let me share with you my thought process, to why I was, looking to short this market. So usually when I put on a trade, right, I would like to ask myself a few questions. Number one, what is the market structure? So when I was looking at this chart, I asked myself, what is the market structure of this chart, right? Is it in a range? Is it in a downtrend? Is it in an uptrend? So clearly in this case, right, number one, the first question is that, what is the market structure? I realized that the trend is down. So now that I know the trend is down, right, I want to be selling pullbacks, selling rallies, right, selling from an area of value. So the second question I ask myself is the price at an area of value? Number two, is the price at an area of value? An area of value could be at resistance, at swing high, at a trend line. Those are examples of an area of value. And in this case, I noticed that this price over here, right, at this point, the price is at this area of value, right, at previous support. Then it had a false breakdown lower, then rallied up all the way up higher, came back down, then broke support over here, okay, then hit down lower, and now become previous support, now becomes resistance, right, now acting as resistance. So the price is at an area of value, so that's good, right, at resistance, let's call it R. And the third question I ask myself, right, is there a valid entry trigger? So an entry trigger could be something simple like a reversal candlestick pattern to tell you that, hey, the sellers are momentarily in control and the price could possibly head down lower, right? So just simple reversal candlestick patterns like, bearish engulfing, bullish engulfing, shooting star hammer, etc. So in this case, what I had was a bearish engulfing pattern over here, right? In fact, it's what I call a false break. Notice the price actually took out this highs and this highs over here, right? Why this is significant is because when the price breaks above the highs, you can be sure that there will be traders looking to buy the breakout because they think, oh, look how bullish this is, right? The market is breaking out. Let me go long, right? Let me buy. And when they go long above the break of the highs and the market does a 180-degree reversal, right? How many times have you, got stuck in this type of price action, right? The market does a 180-degree reversal, right? You realize that you're caught on the wrong side of the move, right? So this is where I went short, right? When the price did a false break of the highs. Okay, so I went short on the next candle open, which is this candle here. Okay, this candle here, I went short on this candle here, right? Stop loss is quite straightforward. I simply set my stops 1 ATR above this high. So there's some buffer, right? So my stop loss is somewhere about here. And if you think about this, right, the reason why I set my stop loss at that level is because I'm setting my stop loss above resistance. But you have to understand that resistance is not a level on your chart. It's an area. So this means the price can trade above resistance by 3 or 4 pips and then collapse back down lower. That's possible, right? Because it's not a level on your chart, it's an area. So you're going to give it some buffer on your chart, right? Such that even if the price spikes up by a few pips, right, you don't get stopped out. So this is the buffer that I've set, right? Just 1 ATR. Just pull out the ATR indicator, find out what's 1 ATR and add on to this value of this highs over here. Okay? So at this point in time, I'm short, right? I have my stop loss and I'm looking at this trade and the market is in a downtrend. So how am I looking to exit this trade? So I noticed that this market, right, there is this swing low over here. And I tell myself, right, that the price, right, should at least retest this swing area over here. Okay? It should at least retest that. So if the price does not retest that area, right, I already have my stops in place. Right? It's either going to hit me up for a loss of 1R or it's at least going to retest this area. And if it retests that area, there's a chance that the price might break down lower, right? And I want to hold on to the trade, right, for a swing down lower. So I will hold on to the trade, right, and exit only if the price breaks and close above the previous candle high. But first, it has to retest this area, touch this level first before I adopt any form of a trailing stop loss approach. So you can see that this trade isn't the easiest one to hold, because you notice that the price pretty much, went against me for quite a bit, right? In fact, in last month's video, you noticed that we talked about this build up over here, right? I said that there's this build up forming. It's not looking too good for me, right? And I might get stopped out. I said all those. And the reason why I didn't bail out of my trade earlier is very simple. It's because my stop loss is at a logical level. I have set my stop loss above resistance about here. And if the price has not reached this level yet, then resistance is not broken. And if resistance is not broken, then why do I want to exit my trade earlier? Just to feel better? Just to reduce my loss? Minimize my loss? No. I have a plan and I follow the plan. Okay, so my stop loss is at this level, right? No doubt there is a build-up form against me, right? I didn't shift my stops. I just leave it there. If I'm going to get stopped out, so be it. And fortunately for me, in this case, right, the price pretty much after which break down. Okay, you can see that over here, this at this point, it has now retested this swing area that I'm looking at, this swing low. Okay, and I'm using a trailing stop loss, right, where if the price breaks and closes above the previous candle high, I'll exit the trade. So in essence, right, this trade, I'm just looking to capture this one swing down, this one move down lower. So you can see that the price hit down lower at this candle at this point. Over here, it break and close above the previous day high, and I exited this trade of AUSSIEN. Okay, so hopefully this step-by-step explanation give you an idea, to how and why, and when I took this trade on AUSSIEN. So another trade that I took, okay, just to walk you through, is the S&P. So the S&P, I just give you a background picture, right? If you look at this on the daily time frame, you notice that this S&P 500 is actually forming somewhat of a build up at this highs over here. Okay, previous resistance now become previous resistance now could become support. Right, so this is the big picture on the S&P daily time frame. And if you pull out the 20 MA, you notice that the price, right, has been respecting the 20 MA and remaining above it. So this is the big picture. So what happened is that on the 4-hour time frame, okay, over here, I went long on the false break over here. So this setup is actually quite similar to the AUSSIEN, just that it's the inverse. It's the long version of it. So you can see that over here, this is the area of support that you saw earlier on the daily time frame. And there was a false break, right? Notice this move, this bearish momentum move coming into support. Okay, price taking out this lows, take out this lows, take out this lows. So traders, right, imagine they shot the breakdown. Oh, market is so bearish. Let me go short. Let me sell, right? Let me catch a piece of the move. Next thing you know, market did a 180-degree reversal, closing strongly towards the upside. This candle here. So at this point, I noticed this, right? And I saw this false break and I went long, right? Next candle open, I went long, which is this candle here. Stop loss again, 1 ATR below this low, which was about here. So at this point, right, I am looking at this trade, and again, right, I'm looking to ride that one move up higher. After all, the daily is in an uptrend. We have a nice volatility contraction, and the market could explode out higher. Okay, so I am looking to trail my stop loss, right, on the previous day low on the daily time frame. In this case, the market, it did went in my favor. Okay, actually prior to this reversal, right, it actually retested up to this highs, and then it smashed down lower, and then continued the decline all the way down. So in this case, right, this is a losing trade for me, right? It's a full 1 hour loss on me for this particular S&P trade, right? Because of the way that I managed the trade, right, where I was a little bit more aggressive, right, wanting to let the trade run more since the higher time frame is in an uptrend. But clearly in this case, it went against me and I got stopped out. All right, so for other type of traders who are not looking to ride the move, right, this could potentially be a winning trade for them, because they would probably exit their trades, right, at this area over here where, previous support that could act as resistance, right? So this is a level where selling pressure could come in, right? And that's a perfectly fine area, right, to set their target profit. And if that's what they did, right, this would probably be a winning trade for them, but not for me, right? Because of, again, as I've mentioned, right, of the way I manage this trade. So just one last example before we kick off this week's market analysis. I want to share with you, it's gold. Okay, gold. So gold, again, I believe I covered this in last month's video, right? We talked about the breakout of gold. So if you look at gold, right, the big picture, right, just zoom out, you notice that gold is trading at when it broke out over here, at a multi-year high. So this is the highs, I think, in 2016, right? Then it broke out over here in 2019. Let me just zoom back, right? I think this is the highs over here in 2016. So it's a multi-year high breakout, and I didn't catch the first wave of the move. In fact, when gold broke out over here at this point, I'm not in the trade. I'm on the sidelines. So I ask myself, right, how can I get on board this trade, right? I don't want to be buying here. So a lot of times, right, traders, when they see a breakout, they look at to buy the highs, right? Because the fear of missing out, right? Man, I better catch a piece of the move, man. You know, it's going to the moon, it's going to $2,000. Let me enter right now. And the problem with this is if you couldn't buy at these highs, where are you going to set your stop loss, right? You don't want to be thinking how much money you can potentially make. You always want to think about how much you can potentially lose, right? So where are you going to set your stop loss? If you look at this chart, again, basic technical analysis, you know that your stops, right, should go at least below support, below a swing low. So in this case, if you look at this chart, right, I would say this is a market structure. This is an area of support over here. Price should at least go below this level, maybe around the, 1325 level around here. So you can see that from the highs to a reasonable stop loss level is from here all the way down to somewhere here. That's a pretty darn wide stop loss. So I don't want to be buying with such a huge stop loss. So what I did is that I let the market consolidate, form a pullback, right? So I can have a logical place to set my stops. So you can see that later on the price, it did consolidate. Okay, so at this point now, okay, I can actually reference my stop loss from a few locations. When the price break out of this highs, I can go long. And now I can reference my stops right from this swing low, or if I want to be more conservative, even this swing low over here. Can you see now that I have market structure, this one over here and this one over here, right, that could support up these higher prices. Whereas previously, right, I didn't have this market structure earlier. And on top of it, right, if you were to pull out the 20 MA, you notice that the price, right, it's above the 20 MA. So that acts as another barrier, right, to support these higher prices. Right, so now I got more factors going in my favor, and that's where I went long, right? I went on the break of the highs, of these highs. Okay, and stop loss, I referenced this low 1 ATR below it. Okay, so that's where I set my stop loss about here, thereabout. Okay, so this is where I entered on gold. Again, I believe I covered this in last month's market analysis. So have a look at it if you want to see, what I was talking about. And this trade again isn't the easiest trade to hold, right? It broke out, then it went against me. Okay, went against me, and finally, took off again. So one thing I want to highlight is that, again, right, you can see that if you were to set your stops, right, okay, this one you probably would have escaped this, right? So many times traders like to set their stops just below the low, like this one, just below the low. In this case, you might or might not have gotten stopped up from the spike down towards this swing low. So this is why I always say that I like to set my stops, right, just a buffer below a swing low or support resistance. This gives my trade, right, more room to breathe, and I don't get stopped out so easily. So anyway, now gold seems to be working fine, and the way I'm trailing my stops is quite simple. So this to me is in an uptrend, right? Market could continue higher. I have no idea how high it'll go. I'm just using a simple 3 ATR as my trailing stop loss. So this light blue line is simply 3 times the average true range from these highs. Okay, so this is a volatility-based trailing stop loss. I'm using 3 ATR to ride this so-called medium-term trend on gold. Okay, so hopefully that gives you an idea to this particular trading setup. So anyway, moving on, right? Let's talk about the opportunities that I'm looking at this month. The first market that I want to talk about is Brent crude oil. So Brent crude oil, okay, notice that the price, we had a breakdown of this area of support, right? This area of support, right? Okay, let me just walk you through, right? You can see that this is an area of support. Okay, tested once, twice, then price broke down, and now previous support becomes what? Resistance. Okay, previous support becomes resistance. So at this point, right, this is an area of value. Number one, the trend is down. Number two, you're trading from an area of value. And number three, you're looking for is an entry trigger. Okay, so what is the entry trigger that I'll be looking for? So there are many ways to it, right? Again, for example, you could look for a price rejection where the price hits up higher, then close lower near the lows. That's one possibility. Another one where you can look at is a multiple time frame analysis, right? If you look at the 2-hour time frame, you'll see that this market, right, on this 2-hour time frame seems to be in an uptrend, right? Higher highs and higher lows over here, here, and here. Okay, so what I'm looking for as an entry trigger is to have a lower high and lower low before I enter the trade. So for example, it could come down lower here, then it break down. Okay, when it breaks this swing low, now at this point I have a lower high, and lower low. And this tells me that, hey, selling pressure is coming in and the price could possibly head down lower. And that's not all, right? On top of it, right, I'm trading from an area of value and the higher time frame is in a downtrend. Okay, so can you see how all these pieces are coming together? I'm not just selling just because there's a lower high or lower low. No, there's a story to it, right? Okay, there's a multiple time frame analysis to it. Okay, so this is how I'm looking to trade Brent crude oil. And if that happens, right, I'll set my stop loss again, 1 ATR from this highs. Okay, so this is Brent crude oil. And if there's an entry trigger and I'm short, right, again, this trade management will be similar to the Aussie yen. I'm expecting price to at least retest this level here first, at least retest this level. And if it does, I would then have a trailing stop loss using the previous candle high. Okay, so this is Brent crude oil. Another market to share with you, it's the 10-year. Okay, so this market is really in a beautiful uptrend. In fact, if you look at the bond markets across the board, right, they're all in an uptrend right now. And let me ask you, okay, do you want to be buying right now? Do you want to be buying? So often, right, when traders they trade trends, right, they find that they're always entering the trade too late, right? When by the time they buy, the market is doing a reversal or a pullback. So one trick that I'm going to share with you to help you time your entry is to ask yourself, right, where is the area of value on the chart? Right, when the market is trending, there is always an area of value. It could be the 20 MA, it could be the 50 MA, it could be a trend line. So in this case, it's a healthy trend, and usually healthy trend, the area of value is the 50 MA, right? This blue line over here. Notice that it tested once, tested twice, thrice, this one almost a fourth time, and there's a good chance it could come back for a fifth time. Okay, so at this point, right, I don't want to be buying here. I don't want to be buying at this highs. Why? Because historically, this market, the price action tends to retest near the 50 period moving average. And if I want to be buying at this highs, my stop loss, right, logically it has to go below the 50 MA. And it's a wide stop loss, right? So why would I want to do that? When the pullback comes, when the reversal comes, there's a good chance I'm going to get squeezed. Going to squeeze me. So what I would rather do is to be patient. Let the market, let the price come to you. Let it come to the area of value. Okay? And on top of it, you notice that this is actually this area of resistance or swing high, right, could act as support. On top of it, you have the confluence of this 50 period moving average. So let the price come to you, right? This over here, at this point, it's a much more favorable trade location to be trading from, right? You can enter based on the break of structure on the lower time frame. You can enter based on a reversal candlestick pattern on the daily time frame, right? There are different ways to enter the trade. But the key thing that I want to share is, trade from an area of value. You have tighter stop loss, and you have more so-called profit potential. Like let's say you enter near this level, your profit potential could be here to at least this highs over here. Okay, and your stops possibly maybe from here to here. Right, pretty decent risk to reward. Okay, so trade from an area of value, right? So this is one technique to help you time your entry, right? So you don't always enter your trades too late. So now, let me share with you another example. At this point, you look here. You don't want to be buying at this highs, right? Again, where is the area of value, right? Could be at this previous resistance turn support or the 50 MA. Let the price come to you. See, much more favorable trade location over here. So this is something to share with you. And just one last thing before we conclude today's this month's market analysis. All right, the pound against the Swiss franc. So in this case, right, again, you can see, just zoom out, right? This market, it's in a strong downtrend, right? Price broke below this area of support. Let me just zoom out. Okay, price broke below this area of support. Okay, and it pretty much has been collapsing since then. At this point, again, right, I don't want to be selling yet because I just don't have a logical place to set my stop loss. So I ask myself, where is the area of value? Number one, I know the trend is down. Number two, where is the area of value? There are a couple of area of value from what I'm seeing. Number one is this, right? Previous support that could act as resistance. That's one. Alternatively, the 20 MA is providing a pretty decent resistance as well. Market has been contained below it. So one way is for the 20 MA to catch up, right? And the price either pulls back up higher. Okay, 20 MA catch up. At this point right now, you have somewhat of a pullback to look to short this market, right? So if the market breaks below this swing low, you can now reference this level, this swing low, to set your stop loss, right? Again, improves your risk to reward on the trade, right? So this is the pound against the Swiss franc, another market that I'll be watching closely. And oh, by the way, I'm also short the pound yen, right? So for those of you who are who are trading multiple correlated markets, like the pound especially, is trending strongly, you want to watch your risk, right? Because if you risk 1% on pound yen, 1% on pound dollar, 1% on pound Swiss franc, if the pound were to, appreciate, right, all 3 or 4 positions of yours, right, it's going to, move strongly against you. So watch out for that risk. One tip I can share with you is to divide your risk. If you usually risk, let's say, 1% on each trade, and you want to trade 2 pound pairs, you can risk 0.5% and 0.5% on each trade. Okay? Now, if you've enjoyed the market analysis, right, then I want to welcome you to join Pro Traders Age, right? This is my premium membership, right, where you will get such market analysis every single week, right? I usually publish this type of videos on a weekend to share with you my insights of the market, the trading opportunities I'm looking at, the trades I took, and much more. So that's not all, right? Because as a Pro Traders Age member, you get many benefits that come along with it. So for example, you have access to the backtest research lab. So this is a lab, right, where I pretty much backtest the financial markets to tell you what works and what don't in the financial markets. So we have different stuff going on. We have things that talk about stock markets, quantitative trading, and much more. So all this over here in the backtest research lab, and I regularly add in new lessons, new findings that I have in the financial markets. Then also we have the weekly trade alerts. This is basically, right, the video that you've seen earlier, but it's on a weekly basis. So every single week I publish such videos, right? So you can see my analysis, my thought process, the trades I took, and you can shorten your learning curve and quickly level up your trading. So you can see that every week we publish a new video on the markets. And moving on, right, we have a forum coming soon. So for those of you who are watching this right now, the forum might already be up. Okay, so this is coming soon. We have a premium trading strategy guides. This is for you, right? Especially if you enjoy reading my blog post and you want a PDF version of it. So every month we upload new PDF trading strategy guides. It's free for you to download. You can just click on it, right, and you will be brought to a PDF link, a PDF page to download it. We have a exclusive training webinars for you to help you level up your trading, learn new trading strategies and techniques. Okay, these are exclusive webinars that you will not find elsewhere. Then we have trading books and investing books that I recommend. Trading checklist, right? So before you put on a trade, you can download this checklist to review it, right, to make sure that you're on the right side, on the right page, right, and not doing anything funny or silly, right? We have the proprietary trading indicators vault. This is for MT4 users. You can download all these indicators to help you with your own trading, like the MACD, MT4. There's some issue with it. We have fixed it over here. We have the Donchen channel, a news reporter that alerts to you potential important news that's coming up, and much more. It's all over here in the indicator vault. And also we have the simple mean reversion trading strategy that you'll learn, right, to trade the market. So this is a very simple strategy for you to get started, especially if you do not know which strategy to go with. Start with this simple mean reversion trading strategy, because it is back tested, right, to identify first and foremost which markets tend to mean revert, which markets have a mean reverting characteristics, right? Then I explained to you, right, the setup to trade this type of mean reverting markets, right? So you really have the odds in your favor, right? Applying the right trading setup in the right type of market condition. Okay, so this is a mean reverting trading strategy that anyone can learn, right? Even if you have no trading experience. So this is what you'll get, right, as a Pro Traders Age member, right? New content are updated regularly for the backtest research lab, weekly trade alerts, premium strategy guides, and much more, right? And also forum is coming up soon, so you can interact with like-minded traders. So I'll put the link below so you can check out Pro Traders Age. And with that said, right, I hope you've enjoyed this video, and I'll talk to you soon.